My name is Macpherson. I am the VP Mining Analyst at Red Cloud Klondike Strike Inc. and the primary author of our Rockstock blog. Starting at the beginning of 2016, we believe gold entered a new bull run, and that we're on the upswing of a commodity cycle there. In the last 6 months, that seems to have taken a pause. The pause in the gold market appears to be attributed to the Trump trade. There was a belief when President Trump was elected that he would be good, that would be very positive for the U.S. economy, which would be positive for both the U.S. dollar and the U.S. stock market. Both those things are typically negative for gold because there's a negative correlation to that. However, over the last few months, we've started to see that trade falter, and a belief that President Trump won't be able to push through the policies as advertised. And that has reinvigorated the gold price and starts to be positive. The other factor that is positive for gold is we continue to be in an environment of negative real rates. Essentially what you have is inflation is outpacing the nominal interest rate that you can get on U.S. Treasuries, and so that puts it in the environment of negative real rates. In periods of negative real rates, gold acts more like a currency than a commodity, and tends to be also when gold has a strong bull market. When we're looking at junior gold companies, like any business, we look at management and the balance sheet, or balance sheet / capital structure. And obviously with management, does management have a track record? Have they done it before? Can they execute? Do they have the technical and capital markets expertise to do what they say they're going to do? With respect to capital structure and balance sheet, not only do they have the cash to execute on their plan and do what they need to do, or the debt or the capital structure in place that they can execute. It's also, if they do need capital, do they have a structure that is financeable? And those are two important criteria, and I think that applies to any business, not just to gold companies. When we start looking specifically at gold companies, there's three criteria that we think are important. One is location or scarcity. What we've seen over the last 3 years is that the companies that have been taken out in premier jurisdictions like Canada, Australia. Some notable ones are Integra, Claude Resources, and Lakeshore, and so we have a focus on those regions as being a priority, as obviously that's what other people are looking at and majors are looking at. The second piece is catalysts. Obviously with the beginning of the bull run, we've seen that good news is good for stocks again. And with good news being good for stocks, the company has to have the ability to move their project forward and have catalysts that meaningful impact. Sometimes that can be drill results or an economic study, or even a permitting update. But the ability to advance to those milestones are important, and for them to be meaningful to move to change the project, so that they add value for shareholders. The last thing that we look for is the project's potential. Is it something that someone else wants to own? We've talked a little bit about takeouts and the scarcity, but that's an important thing. Very few gold companies make it from the exploration stage, development stage, into production. Often they're taken out by larger producers. And so is this a project that has the ability to be taken out that someone else is going to want and fits their mold?